Accounts from incomplete records or single entry. Usually prepared by sole trade business and small entities may prepare this one. They don't have complete structure. Whatever the transaction they do, they may have a small information only. All the crude informations will be used for finalizing the accounts here. Okay. So usually you have to prepare opening statement of affairs, cash book, trading and P&L report and balance sheet. You study this chapter, single entry, immediately after NPO. So they both will be having a complementary learning effect. Okay. So there we learned opening statement of affairs, receipts and payment, income and expenditure and balance sheet. Similarly, instead of income and expenditure, we have the trading and profit and loss account. So first block trading account and second block P&L account. That's how we can study here. Apart from that, we learned what? The treatment of some special items like stationary stock. Opening stock plus purchases minus closing stock. Finally, you'll get the consumptions of stock. And in case of income received, add outstanding of the current year, advance of the current year, subtracted. Outstanding of the previous year received will be subtracted, advance of the previous year added. So this will be a revenue income transferable to the income and expenditure account, but in case of single entry, it is transferable to the trading and P&L account. And the first one will be the receipts and payment account. These outstanding advance of the current year will go to the closing balance sheet, either it may be asset side or liability side. Similarly, this will be appearing in the opening statement of weights in the asset side or liability side. The same happens in case of expenses. This one also similar to the thing what we have learned in NPO. Is that okay? So apart from that, you better understand to prepare the assets account. We have studied that assets account in chapter depreciation. Isn't it? We studied in depreciation chapter. In depreciation chapter, fixed assets at WD value. One of the methods is this one. Opening value of the assets and closing value of the assets. Transaction increases the value of the assets should be in the debit side. Transaction reducing the value of the assets should be in the credit side. Right. Those things are increasing the value will be posted in the debit side. Usually purchases. And profit on sale also increases the value in the debit side. And in credit side, the items which reduces the value of the assets like sale and loss on sale, depreciation. But the other way, you can show the original value of the assets and any depreciation on the asset is accumulated in a new account called provision for depreciation, then provision for depreciation. Either you can follow this method or this method. So sometimes some missing data may be found out by preparing the concerned asset account. While preparing the asset account, it may be WDV model assets account or original cost along with the provision for depreciation model you have to prepare. That you have learned along with the depreciation chapter. So this chapter is nothing but applications of the concepts what you have already learned. One special thing I am going to guide you here is all about debtors and BR as well as creditors and bills payable. Okay, non-current liabilities and liabilities. Liabilities is very simple. That we can skip. You can easily understand. So you have to now understand the debtors along with the BR. Debtors is an asset. We learned the debtors chapter, debtors adjustment in final accounts. Debtors, provision for doubtful debts and all. Isn't it? In debtors, how the account will be there, opening balances, closing balances. Is that okay? Opening balance should be in the debit side, closing balance should be in the credit side. The item contributing the increase of the debtors should be in the debit side. If it is contributing for reduction of the debtors should be in the credit side. Usually, credit sales will increase the debtors balance as well as when the debtors balance is decreasing on payment or if we offer discount in case of bad debt. In these cases, along with the sales return, will be reducing the debtors values, right? Isn't it? So the value increases the debtors balance being the credit sales, the value decreasing the debtors is nothing but reverse of that. Sales return, settlement, discount, bad debt and all. Bad debt and all. Is that clear? Now, I am going to incorporate the BR, bills receivables. We learned the bills receivables also separately in BR, BR being the asset. The asset will always appear in the debit side opening, credit side closing. If the asset increases, it should be debited. Asset decreases, it should be credited. If the debtors is converted into BR, So if you are receiving the BR from the debtors, the journal entry being BR account debit to debtors means debtors decreases, BR increases. That will be the first transaction. Is that okay? So BR will reduce the debtors and increases the BR. And BR sometimes later may be paid. So on payment, so bank will be there on maturity. Sometimes they may ask a discount. Sometimes it may be endorsed creditors. Sometimes this may be dishonor also. Okay, this is nothing but discounting and discount. This is at the time of discounting you will get the discount or endorsing to third party. Even later on encashing, maturity or discounting will be the first one to reduce the debtors BR, and discount allowed will be also reducing the BR, and endorsing to the creditors will also reduce this. Okay, so debtors reduces on settlement bank. You get the check so that you will consider the payment is reduced. The payable amount from the debtors is reduced, but the check is dishonored. Then what happens? You have to reverse this. Check dishonor, similarly BR dishonor also be there. These are the two cases. So let me brief all these things in case of debtors, in case of BR. Actually, these two are assets. No, opening balance should be in the debit side. Closing balance should be in the credit side. In debtors, opening balance should be in the credit side and closing balance should be in the credit side. If any transaction increases, the debtors balance should be in the debit side, decreases should be in the credit side. Similarly, BR increases should be in the debit side, decreases should be in the credit side. And what increases the debtors? Credit sales. What decreases it? Bank settlement or cash payment or discount may be offered and bad debt and sales return. These are the values are transactions are reducing the debtors balance. Suppose the bank gets dishonored later on, what happens? Bank in brackets dishonor. Sometimes debtors will accept for BR, that also reduces the balance, automatically it raises the BR account. Okay, parallel. Is that clear? And the BR can be encashed or encashed on maturity or discounted, or it may be handed out to the creditors endorsing. While doing so, you will get sometimes discount. You have to offer discount. Sometimes the amount may be dishonored. In case of dishonor, again it comes as a debtors here BR. This is nothing but dishonor. Is that okay? Parallel. Clear? Then we may have the mutual cancellation. Already we studied in final accounts chapter. One of debtors being my creditors. From X, I could have purchased for 1 lakh. To same X, I could have made a sales of rupees 1,50,000 rupees. So for the sales I have to receive, for the purchase I have to make the payment. So here the mutual value of 1 lakh could be automatically cancelled. So only 50,000 will be there. So that will be called mutual cancellation. So in that case, mutual cancellation, the debtors balance also reduces, creditors balance also reduces. So here you simply name this being creditors. Is that clear? Hope now you'll be able to understand all these elements coming in the debtors BR in comprehensive manner. We have studied the basic debtors in case of final accounts. We have referred the bad debt, provision for doubtful debts and all in detail while studying the means final accounts adjustment account. And we studied BR separately. Okay, here BR and debtors both put together, we are studying the comprehensive ledger like. This one will be the newest one applicable for the single entry. Rest of the things are similar to what? The same like the non-profit organization as final accounts. As we have the debtors alone sometimes we have debtors and BR both put together. You have to understand what are the components will come in these debtors and BR. Same way in creditors also. So in case of creditors, the opening value will be in the credit side, closing will be in the debit side. Parallelly, we may have the bills payable, opening being in the credit side and closing will be in the debit side. Creditors increasing, then it should be posted in the credit side as a liability. In case of reduction of creditors, should be posted in the debit side. So what causes the increase of the creditors? Credit purchases. Okay, when it is going to be reduced, make the payment, or you can receive the discount, or purchased item can be simply returned. Purchased item can be simply returned. And sometimes we may accept the bill. If we accept the bill, automatically creditors decreases. Instead of that, bills payable will be increasing. Okay. And this bills payable increases because of accepting the bills payable. On maturity, it will be settled on honoring. On honoring, it will be settled. Apart from that, we have the mutual owing. Mutual owing will appear in the debit side of creditors as well as credit side of the debtors. Mutual owings. Okay, give and take. Both will be cancelled. So you have to understand all this logic here. All this logics here. Okay, anyhow, we'll see along with the illustration. We'll start solving the illustrations one after one. Come on, join with me. It's pretty simple. Start with the first illustration. So you have to prepare receipts and payment for the first illustration. Mr. Dibhankar, a retail trader, needs financial statement for the year ended for availing a bank loan. He gives you the following information regarding receipts and payment. So you have to prepare the full financial statements, trading, P&L account, balance sheet, as well as opening statement of affairs, as well as closing balance sheet. All you have to prepare. Okay. Yes. Open all the ledgers and statements. Opening statement of affairs. Okay. Balance sheet. We start with receipts and payment or cash book. Trading and P&L account. And then balance sheet. And then balance sheet. We'll start with opening statement of affairs, and then receipts and payment or cash book. Also, we may have some adjustments. For finding some missing data. Here we have been given debtors and creditors. It's better to open debtors creditors ledger account also. Debtors and creditors ledger account also. Debtors. We don't have BR or BP here, simply debtors and creditors account only. What happens if everything is given as an adjustment or loose statements, like it should be posted twice? If it is given as a statement or account format, it should be posted only once. That logic will be applicable here also. We'll start with the first few items. Apart from that, this is the initial balance sheet information. We'll start posting this first of all. Come on, tell me where to post. Stock should be posted twice. Opening stock, being the asset, shown in the asset side of the opening statement of affairs 3 lakhs 20. Double entry. Another entry will go where? Trading account debit side. Opening stock. This value being 3 lakhs 20,000. Closing value being 4 lakhs 40,000. Asset in the balance sheet 4 lakhs 40. Parallelly, it should be posted in the trading account credit side. Closing stock 4 lakhs 40,000. Bank opening balance. In the opening statement of affairs balance, so we have cash also. So then we can prepare in columnar form. Bank balance in the beginning 55,000. In the closing, bank balance being 38,000. And cash also we have in the opening as well as end. Opening being 10,000. Closing cash being 12,000. Debtors in the beginning being 75,000 and closing debtors being 86,000. Creditors here 48,000 and closing creditors here 70,000 rupees. All these four items should be posted twice. Double entry. The bank and cash will go to the cash book. Opening balance. Cash being 10,000, bank being 55,000. Cash and bank. Cash and bank. Closing cash and bank being closing balance. Join with me to solve immediately. Don't delay it. 12,000 and 38,000. If you have little bit of idea, you can try it yourself. You can go ahead of me. So we have posted the bank and cash twice. Similarly, debtors. Opening balance should be in the debit side of the debtors, the value being 75,000 and closing value of the debtors being 86,000. Similarly, in creditors, opening balance 48,000, closing balance 70,000. Hope now you'll be able to understand that we have completed posting all these items twice. Now, 10 transactions are there to be incorporated. Let me finish the first 3 transactions. Come on, tell me. How can I record the first one? Cash deposited into the bank account, 1,05,000. For the bank, 1,05,000 is the receipt. For the cash, 1,05,000 is the payment. Under this, I name this being bank. Under bank, it is named as cash. For bank, it is a receipt. For cash, it's a payment. Contra entry. Dividend from companies deposited into the bank, 5,000 rupees. Dividend from the company. How can you show? Come on. Dividend receipts. In the receipt side, dividend 5,000 rupees in the bank account. Second entry should be where? In P&L account, income side. So here, dividend. Dividend receipt 5,000 rupees. Tuition fees of daughter paid by check. Come on, show me. In the payment side of the bank account, 15,000 should be shown. Clear? And tell me where to adjust this. Tuition fee of daughter. Where will it come? Hmm? P&L account. Expenses. Drawings. Owner's personal expenses. We learned all these things earlier, right? It's now out of my memory, sir. So tuition fee for daughter is nothing but drawings. Personal expenses. Subtract from the capital. Whatever the capital, from there drawings is subtracted. 15,000. Already we learned, but we forget to apply. If you post that in the debit side of the P&L account, it's error of principle. Usually error of principle will come. It's because of non-understanding the accounting principle, sometimes because of the letharginess, right? 3 transactions were posted. Let's move on to the 4th onwards. 4, 5, 6. We try to finish up these 3 more transactions. Come on, tell me. Rent for the year paid by cash 24,000. Where can I post? In cash, rent 24,000. Second entry in P&L account. Rent for the year 24,000. Cash collections from debtors. Cash collection. In cash column, receipt side, debtors. Collection being 5,50,000. Another record. Where should be the another record? Come on. In debtors, it reduces the debtors balance, means the credit side. So here cash. Cash paid 5,50,000. Hope now you will be able to understand why do we want to study the debtors account also. You need to be master with the debtors account format. Amounts paid to the creditors 4 lakhs in cash and 1 lakh by check. So payment side. Creditors, payment made to creditors. Amount paid to creditors 4 lakhs by cash. So from the cash 4 lakhs has gone. 1 lakh by way of check. And another entry should be in the debit side of the creditors. Cash payment 4 lakhs as well as bank payment 1 lakh. Bank payment 1 lakh. Is that clear? Amounts. So we have completed 4, 5, 6. All the 3 transactions were posted. Now let's go for the 7, 8, 9, 10. 7, 8, 9, 10. So these are the 4 items are going to be posted here. Tell me, salaries and wages paid. In the wages side, salaries paid. Value being 36,000. I assume that the payment is by way of cash, as the information is silent. Okay. And salaries and wages being an item of expenses debited to the P&L account. So here salaries and wages. The value being 36,000. Office electricity paid by check. In the payment side, EB. Value being 12,000 rupees in the bank column. And it is being the expenses, put the value in the debit side of the P&L account, 12,000 rupees. And general expenses incurred in cash, 18,000 rupees. General expenses incurred in cash. So general expenses. The value being 18,000. 18,000 rupees. Can be debited in the trading account, so P&L account, general expenses in the payment side, 18,000 rupees. Drawings every month, rupees 6,000 by cash. Drawings. Right. So monthly 6,000 means 12 month, 72,000 drawings. Okay, that too in the form of cash. Already 15,000 is there. With that, another 72,000 is added. This will be the drawings. I have completed posting all these items here. Clear? Now, tally the ledgers. By tallying the debtors account, what is the value you are getting? 6,36,000. 6,36,000. 5,61,000. What could be this one? Come on. Maybe credit sales. Okay. Balancing figure, credit sales. Where this will go? So it should be posted in the credit side of the trading account. Sales. The value being 5,61,000. Creditors 5,70,000. 5,70,000. 3,22,000 is the balancing figure. What about this one? Creditors increases only due to what? Credit purchases. So credit purchases. Balancing figure. Where will it go? This will go to the trading account debit side purchases. The value being 3,22,000. 5,22,000. $5,22,000. Now finish up telling the opening statement of affairs. 4,60,000. 4,12,000 being the balancing figure is nothing but capital. Balancing figure. Where will it go? Closing balance sheet, opening capital being this one, 4,12,000. Finish up tallying the cash book to find out if there is any balance. Cash 6,67,000. Closing balance 12 is cash and bank balance okay. 6,67,000. And here you will get 1,07,000. Balancing figure. What about this one? What about this one? Any other income? Receipt side no. So it may be any other income. Or we got the credit sales. It can be cashes. It can be cashes. Balancing figure. Otherwise, you can name this being the other kind of income and post that in the credit side of the P&L account, also acceptable. So here I assume this is being cashes. Cashes being 1,07,000. What happens in case of a bank column? It's tallying, no problem here. So 1,65,000 it gets agreed. Yes, now try to solve the trading account. By telling the trading account, the total being 11 lakhs, 8,000, 11 lakhs, 8,000. Your GP in this case being 2,66,000. Here the GP being 2,66,000. Tally this 2,71,000. 2,71,000. Ultimately, you get the net profit. Hope the net profit being 1,81,000. I transfer that to P&L account, means balance sheet. 1,81,000. Now come on, find out the closing capital. Opening capital minus drawings plus net profit. Closing capital being 5,06,000. Am I right? Yeah, if I tally this, the total being 5,76,000. This illustration resembles like a non-profit organization, but bit easier. Usually single entry, no, we don't have more complications like NPO, but we may include debtors, creditors, BR and BP also. Clear? Come on, make a note of it. Question number 2. So we have been given the balance sheet of Sri Raman, and a riot occurred on the night of 30th June 2024. So this is what about the balance sheet as on the date. This may be 23. You can change the date. Okay, 23. Now, 1 year later, fire occurred in which all books and records were lost. The cashier has absconded with the available cash. So, whatever the cash left over, the cash bags taken and run away from us, and it may be a loss. This is called defalcation. Cash is taken by the cashier. Sri Raman gives you the following information. These are the information. G. Up to G, we have been given information. Prepare trading and profit and loss account for the year ended 30th June 2024, and then the balance sheet. So you have to prepare trading and P&L account and then balance sheet. Opening balance sheet is already given, so you no need to open the opening balance sheet. Is that okay? Now you have to prepare only these two. Any working notes like you can prepare what? Cash book and other things also. Let's now start. What is required to be prepared here? Trading and P&L account and balance sheet. But it's better to prepare the cash book also as an additional working note, and even sometimes some other assets account, debtors, creditors account, BRBP account also be required to find out some missing data, right? So here cash book, receipts and payment. So let me finish up posting the balance sheet items. As this one is given as a statement, you have to post only once. All the balance sheet item will be posted in the concerned closing balance sheet. Capital account, initial capital 96,000, loan account 30,000. So we have been given the creditors and debtors. So it is better to open the debtors and creditors account also to get some missing data. Debtors account, creditors account. In creditors, we have the opening creditors being 62,000. The opening balance should be in the credit side. As it is being the liabilities, the opening should be in the credit side, 62,000. Then in case of assets, building 65 subject to depreciation, furniture 10 subject to depreciation, motor car 18,000 subject to depreciation, stock, opening stock will be in the trading account, the value being 40,000. Debtors 34,000 in the beginning. Okay. We have been given cash and bank. So in cash book, cash column, bank column. Here balance, opening balance 4,000 being in cash, 17,000 being in bank. Okay. Clear? Now you are able to understand all these logics. So I have completed posting the opening balance sheet items once. As the information given in statement form, it should be posted once. We have completed posting that once. Let's start with adjustments. Adjustment A. Right. Higher by 20% compared to the previous year. He always sells the goods at cost plus 25%. If the cost being 100, they need to add profit with that 25 rupees, sale price being 125. Sales compared to the previous year. Sales in the previous year assumed to be 100. There is increase in sales by 20% in this year compared to the previous year. Then sales in current year being 120 rupees. If the previous year the sales being 1 lakh, in this year the sales should be 1 lakh 20. I just note down all the information given in the adjustments. That's all. I didn't do any other adjustments. 20% for the total sales for the year ended on 30th June 2024 were in cash. Okay, whatever the sales you get, based on the previous year. 20% being cash hits. Balance 80% should be credit sales. Clear? No other information given. No other information given in adjustment number 1. This single entry, if you solve the single entry from CME Inter book, really challenging. Sometimes it will take at least 1 hour also. How many of you tried the NPO from CME Inter book? Okay. What's the time actually you are taking for solving one illustration in case of comprehensive illustration covering all the statements? 45 minutes. 15. 50. Shocked. Oh my God. It's not possible to solve in 15 minutes. What about your case? 1 hour. Okay. But in your examination, you also covered in 1 hour. Okay. He's saying, oh my God, something they are talking not relevant for me. Are you trying anything? No, sir. Trying. What's the time consumption? How long will you take for solving one illustration?
1 hour, sir.
Really? Let it be 1 hour, sir. Okay. Similarly, when it comes for the single entry, it will take definitely 1 hour also. Okay, sometimes it may be 1.5 hours or 2 hours. In one case, no. I solved in 8 hours. Okay, covering around 24 adjustments when I joined for the CME Inter. Okay, the question coined by my teacher. It's not available in textbook. Usually, it designs his own illustration. The illustration itself runs through around 1.5 page. Thereafter, he dictates around 24 adjustments. That 24 adjustment went for another 1.5 page in my A4 note. So 3 pages the question itself. Okay, reading the 3-page question itself takes around 10 minutes at least, 5 to 10 minutes. Then I have to solve. Right, see, you can try. You can try the single entry also from the CME Inter. Though you may study CA Foundation, after completion of the illustrations from the CA Foundation, you can go and cover some illustrations from the CME Inter also for the additional learning. Really, it's challenging. Right. Now, second part, B. On 1st July, the stock level was raised to 60 and stock was maintained at this new level throughout the year. What does it mean? Closing stock. Closing stock being 60,000. They raised the closing stock from 40 to 60 on 1st July 2023. Thereafter, it is maintained for the entire year. Then closing stock value being 60,000 rupees should be posted twice. One is in trading on credit side, another one should be balance sheet asset side closing stock. This value being 60. This value being 60. Then C. Collection from debtors amounted to rupees 2,80,000, of which 70,000 was received in cash. Collection from debtors. Okay. Receipt side. Collection from debtors. 70,000 cash. Balance 2,10,000 being in the form of check. So in debtors, in credit side, cash and bank. Value being 2,80,000. Business expenses amounted to rupees 40,000, of which 10,000 was outstanding on 30th June 2024 and 12,000 was paid by check. Right. Third one. Business expenses. Business expenses being 40,000 rupees. Out of that, outstanding being 10,000. Payment by check being 12,000. Balance payment may be by way of cash, 18,000. So I had to post all these things, double entry. Right. Outstanding. Business expenses should be 40,000. Should be in the debit side. And 10,000 out of that being outstanding. Outstanding expenses. Liability side. Out of that, payment 12,000 rupees by way of bank, 18,000 by way of check. Cross verify. This 40,000 is the debit balance. 18 plus 12 credit. Liability side also credit 40. Debit side we posted 40. Credit side also we posted 40. You have to cross verify always this. So in the debit side of the P&L account 40,000 posted, equivalent credit side value should be there, right? In cash book we have posted 18 plus 12, 30 in the credit side. Apart from that, liability side is equal to what? Credit side only. So total 40,000 in credit side also posted. You can do the cross verification so that you will not make any error. Now, point D, analysis of the passbook. This is passbook. So this is nothing but information relevant in the bank account. Payment to creditors 2,75,000. It's clearly stated it is from the passbook, means these items are appearing in the passbook related to the bank column. So payment made to creditors 2,75,000. In creditors, here bank, the value being 2,75,000. Personal drawings 15,000. So drawings 15,000. And it should be subtracted from the capital. Cash deposited in bank. So for the bank, it is a receipt 1,43,000. For cash, it's a payment 1,43,000. Contra entry. Under cash, it is bank. Under bank, it is cash. Cash withdrawn from bank. So from the bank, it is now withdrawn. For the cash, it's a receipt 24,000. For the bank, it is bank payment 24,000. Under that, this will be called as cash contra. Under this, bank 24,000 contra. Is that clear? Hope now you'll be able to understand all these things. So with that, these points also be incorporated. Now, we still have three more points, E, F, G. I'm going to incorporate these 3 points here. Gross profit as per the last year's audited account 60,000 rupees. GP in the previous year 60. You know that GP in the previous year 60 means I put the value here, GP. Is that okay? Previous sales, whatever it may be, but the GP is 60,000. Compared to the previous year, in this year, sales increased by 20% means GP also increases by 20%. Maybe 12,000 increases. 72,000 will be the new GP. Clear? Hope now you'll be able to guess this. Gross profit as per the last year's audited account. Last year account shows the GP being 60. Compared to the previous year, this year sales increases by 20%. We assume the same sales and cost ratio is maintained in this year also, the GP increases by 20%. We got the GP being 12,000 rupees. GP being 12,000 rupees. Sorry, 72,000 rupees. Current year GP being 72,000. As 72,000 being year profit, which is 25. Then what about the cost? 4 times of that. Okay. What's the value? 2,84,000 is the cost. What about the sales then? 3,60,000 will be the sales. We got the sales value now as a missing data. Once you find out the sales, you can now post that. Here, sales. That sales 360, you know, which is the current year sales. Out of that, as per the second adjustment, 20% belongs to cash, so 72,000. Balance 80%, 2,80,000 in credit. So sales, cash sales being 72,000, credit sales being 2,88,000. Double entry. Cash sales will go where? In cash book receipt side 72,000. Credit sales will go to the debtors account. It raises the balance recoverable from debtors 2,88,000. Sales. Is that okay? Very interesting, right? So you have to guess a lot. Apart from that, we got the GP of rupees 72,000. GP should be where? In trading P&L, trading account debit side and P&L account credit side by GP. This value being 72,000. Only one information, E information, gave me a broader opening. So using the E, I completed all the other things also, like sales, in that sales, cash sales and credit sales, GP, and all the items were calculated based on the ETH adjustment. Is that clear? One of the interesting one. So it is not the usual way, directly points given to post in your trading and P&L account. Sometimes you have to guess. Right. Now, provide depreciation on building furniture 5%, motor car 20%. For building 5%, how much is that? 3,250, am I right? So depreciation for building 3,250. Furniture 5%, 0.5, am I right? 61,750, am I right? This one being 9,500 for furniture. For motor car 20% 3.6 15,400, sorry 14,400, and double entry being in P&L account, depreciation for the motor car being 3,600. Point E is also over. The amount defalcated by the cashier may be treated as recoverable from him. So of course any cash balance we have in our cash box was taken and absconded. The cashier absconded, right? So that amount anyhow will be recoverable. So recoverable means simply put the value being amount recoverable from cashier. Cashier. Okay, balancing figure. This amount recoverable is asset. So amount is with the cashier. I have to find out this balance and post this here. Okay. Sometimes it may not be recoverable, defalcated. In case cash theft happened, where theft is done by some of the employees, that will be considered as normal expenses debited to the P&L account. But here also the amount is lost, stolen. Though it is stolen, the cashier is absconded, but the management believes that any of this amount can be recoverable from him. As it is recoverable, it can be kept as an asset here. So we have posted all the items. All the items. Now tally the trading and P&L account. 4 lakhs 20. Am I right? In this trading and P&L account, one item is missing. What is that? Purchases. So all the other details are available. So by tallying this, you can get the purchases value easily. Balancing figure 3 lakhs 8,000. Then automatically it should be posted where? In creditors. This purchases may be assumed to be the credit purchases. It gives the rise to the creditors. So here purchases. This value being 3 lakhs 8,000. First you close the working notes first of all. Debtors, creditors, cash book. Some other outstanding advance expenses working notes if you have prepared. Then you finish up that. Finally, you can go for the trading and P&L account and balance sheet. So now, finish up the debtors here. 34 plus 288, 3 lakhs 22,000. 3 lakhs 22,000. Right. And balancing figure being 42,000. Balance. We'll go to balance sheet asset side, cash. Debtors value being 42,000. In creditors, you tally this 3 lakhs 70,000. 3 lakhs 70,000. So you'll get 95,000 being the balancing figure. Balance carried out. Okay. $2,000. The ultimate value what you get here is the net profit. 24,650 should be addable with the capital account. 24,650. Capital minus drawing plus net profit. What is the closing balance? 1,05,650. Total the balance sheet 2,40,000. 2,40,650. Creditors balance being 95,000. Now it's agreeing, right? Doll and Dolly are in partnership sharing profits or losses equally. They keep their books by single entry system. No ready figures are available for the total sales, but they maintain a steady GP of 25% on sales. One additional information is there. If sales being 100, GP is 25 rupees, then cost should be 75 rupees. That's a clue. On an abstract of their cash transaction is given here, receipts and payment. Apart from that, the balances of various assets and liabilities are also given. Other information is there. From the above, you are required to prepare in the books of Doll and Dolly, trading and profit and loss account as well as balance sheet. Yes, come on, open those accounts here. You no need to open the receipts and payment which is given here. Yes. Open the trading and P&L account. Trading and P&L account and then balance sheet. And balance sheet. Opening statement of affairs. We'll start with receipts and payment to be posted. Receipts items and payment items. Finish up posting this. Come on. Cash in hand in the beginning is nothing but the opening assets should be posted in the asset side in the opening statement of affairs. Cash 10,800. Receipts from customers. So then you have to open debtors account. In debtors, opening balance should be in the debit side. Closing balance should be in the credit side. If the transaction increases the debtors value should be in the debit side. Decreases the debtors value should be in the credit side. Receipts from customer will be decreasing. So here cash, the value being 2,70,000. Cash sales in trading and P&L account, credit side by sales, under that cash sales, value being 32,000. So we have posted all the three items here, all the three items. With that, what is over? Receipt side of the cash book is over. Now let's go for the payment side. Salary is 22,000. P&L account debit side. Rent 4,400. P&L account debit side. Advertising P&L account debit side 1,800. Printing 1,600. Payment to trade creditors. So we have to open creditors also. Creditors opening will be in the credit side, opening balance. Closing balance should be in the debit side. If creditors balance increases, post that in the credit side. If decreases, then it should be posted in the debit side. Payment to creditors decreases the creditors balance. So here cash, this value being 2,24,000. 2,24,000. Closing balance. Doll's drawings 4,000 rupees. So capital account, We have two parties here, doll and dolly, and total. Opening capital, add net profit for the year minus drawings. Here the drawings being 4,000 only for the doll, not for dolly. And closing cash balance being 35,900 cash. 35,900. With that, payment items were posted. Payment items were posted. Clear? Any doubts here? So with that, we have completed posting the receipts and payment items. I never bother about this anymore. Now balances of assets and liabilities in the year beginning and year end. Okay. Stock in trade. Stock in trade. Opening being 44,000. Closing being 50,000. Double entry should be there. So another entry should be in the trading account. To opening stock 44,000. Closing stock 50,000. Sundry debtors, opening information is silent and this one is silent, but closing information being 70,000 rupees. 70,000 rupees. Double entry is over. Sundry creditors, in the beginning I have 46,800. In the end we have 37,000. Double entry should be posted in the creditors account, opening 46,800, closing 37,000. Furniture 6,000 in the beginning and closing furniture supposed to be calculated. I put the value here 6,000. Maybe some depreciation and purchases, sales may happen. So I just keep it in inner column. Double entry. So opening 6,000, 6,000 recorded, supposed to be adjusted. With that, the assets and liabilities details in the opening balance sheet, closing balance sheets were incorporated. We have been given around 5 adjustments here. 5 adjustments. Let me try to finish up all the 5 adjustments here. Yeah. Discount allowed is expenses debit in the P&L account 2,800. Next entry, it reduces the debtors balance, so discount allowed 2,800. Discount earned in credit side, discount earned 2,400. That reduces the creditors balance, so discount 2,400. Printing outstanding expenses. Outstanding. So 1,600. Okay. Three, 4, 5. Only 3, 4, 5. Printing 500 outstanding. Outstanding printing expenses. Liabilities 500. It will be addable with the printing expenses 1,600 plus outstanding 500. So now the printing expenses being 2,100. Is that clear? Capital of doll as on 30th June 23 was 4,000 more than the capital of Dolly in the year beginning. While comparing the capital's Doll's capital is 4,000 more than the Dolly's capital. Okay, here Doll capital is equal to Dolly plus 4,000. Is that okay? Dolly plus 4,000. Provide depreciation at the rate of 10% on furniture. So for this, depreciation 10% is 600, so 5,400. Depreciation should be debited to P&L account. Depreciation, furniture depreciation. The value be 600. Is that clear? Now, what is the GP ratio they have? 25% on sales. Cost, GP, sales. If sales being 100, GP is 25, cost is 75. This is another information. So we have been given two informations. I have incorporated all the points. Now you have to close the books one after one. By tallying the creditors, what is the balancing figure you get? Total being 2,63,400. 2,63,400. Now what about the balancing figure? 2,16,600. What should be this balancing figure? Purchases. This should be the purchases. Purchases being 2,16,600. Clear? Now, if I get the GP, all the accounts may be closed comfortably. Cost, GP, sales is there. What is this cost? What is this cost? This cost is nothing but cost of goods sold. Cost of goods sold. Cost of goods sold is nothing but opening stock 44,000. Add purchases 2,16,600. 16,600 minus closing stock 50,000. Am I right? Then the ultimate value what you get here is the cost of goods sold 2,10,600. So the value of stock sold being 2,10,600, which is this one, Usually they add profit at the rate of 25% on sales. If the sales being 100, GP is 25 and cost should be 75. Here the cost 2,10,600 represents, what's that? 75%. Then another 25% you can do the cross multiplication. Divide this by 25 and multiply with 75. The ultimate value be 70,200 is the GP. And sales value should be 2,80,800. So GP we found out, which is 70,200. In sales, you know, we have been given the cash sales being 32,000. Here is cash sales. So the balance should be credit sales. What about the credit sales now? 2,48,800 being the credit sales. So GP should be posted twice. Credit sales should also be posted twice. Here 2,48,800. Another place will be in the debtors account. That raises the debtors value. So here credit sales. This value being 2,44,048,800. So with that, trading account is completed already. The total of trading account being 3,30,800. 3,30,800. Now creditors account over, trading account over. Now try to close the debtors account to find out the balance amount for the opening debtors. Yeah, the total being 3 lakhs 42,800. 3 lakhs 42,800, and your opening balance should be 94,000. Post that 94,000 here. 94,000 should be posted here. Hope now you will be able to understand. Clear? 94,000. Now tally the opening statement of affairs to find out the balance of capital. Capital of doll and dolly. Both their capital put together, what is the value you are getting? I think this value being 1,54,800. 1,54,800, and the balancing figure being 1,08,000. This 1,08,000 represents the capital of doll and dolly. Now we have to find out the capital for doll as well as dolly. Overall capital for the firm, doll and dolly put together in the year beginning is 1,08,000. Where doll's capital is 4,000 more than dolly's capital. Dolly's capital. Is that okay? So what does it mean? Here I can do a small calculation to get the value. 1,08,000 rupees. 4,000 rupees is excess for whom? Doll, no, that can be separately taken. Balance 1,04,000 will be shared between doll and dolly equally. Dolly, how much? 52,000. For doll, how much? 52,000. So leaving the difference, balance will be shared between these two equally. 52, 52. And doll's value being that excess amount plus this 52, both put together 56,000. So that combined capital being 1,06,000, that 1,06,000 is shared between doll and dolly in such a manner that doll's capital should always be higher than the dolly by 4,000 rupees. So in that the total capital from there, that difference 4,000 is removed, balance will be shared equivalently. That balance, after sharing the balance equally, the higher value will be addable with the higher capital contributor. Higher capital contributor. Here the doll is the higher capital contributor. With that it's added. Now opening capital for doll being 56,000, dolly being 52,000. Clear? Now finish up tallying the P&L account. By tallying the P&L account, you'll get 72,600. 72,600. The balancing figure net profit being 19,800. This 19,800 should be shared to doll and dolly. As the sharing ratio is not given, we assume this is shared equally. This is shared equally. So the net profit will be addable here. 9,900. 19,800 divided by 2. 9,900 for doll and another 9,900 for dolly. Now find out the closing capital to be posted in the closing balance sheet. Closing capital. 56,000 plus 9,900 minus 4,000. 61,900. I think. Am I right? So here capital, doll as well as dolly. 61,900. 61,900. Both will have the same value. The overall capital for the entire firm being 1,23,800. The balance sheet total in this case being 1,61,300. 1,61,300. Hope now you will be able to understand this one. Clear? Third question is over. Yes. K. Azad, K. Azad, who is in business as a wholesaler in sunflower oil, is a client of your accounting firm. You are required to draw up his final accounts for the year ended 31st March 24. Here we have been given opening balance sheet and a cash and bank summary. Cash and bank summary is given, not complete cash and bank account, means receipts and payment is given. So definitely you have to prepare the receipts and payment also. And all other things are raw data. You are requested to prepare the final accounts. Then what you have to do? Prepare opening balance sheet is already given, so you forget about that. So you prepare receipts and payment, trading and P&L account, as well as closing balance sheet. Clear? Now, come on, open all the ledgers and statements along with me. So, trading and P&L account, trading and P&L account, and receipts and payment account, and closing balance sheet, and closing balance sheet. Okay, closing balance sheet. And opening balance sheet details is here. You can finish up posting all the assets first of all. Come on, start posting all these assets and liabilities. Cash and bank, opening balance, right? Opening balance should be in the receipts and payment, the value being 75,000. Debtors 1,60,000. It's better to open the debtors account also. So debtors and creditors account also be opened parallelly. So debtors and creditors account. Here we have been given debtors 1,60,000. Opening balance should be in the debit side, 1,60,000. Closing balance should be in the credit side. Similarly, in case of creditors, opening balance should be in the credit side. Closing balance should be in the debit side. Right. So you have posted cash and bank and debtors. Stock of oil 125. Opening stock in trading account. Opening stock 1,25,000. How many tins we have? 125 tins we have. In quantity also it is given. Furniture 30, depreciation 3,000. So furniture 27 is the opening value. Maybe 30 is given, means if you supposed to calculate the depreciation under SLM method, you have to calculate depreciation on 30. If it is being the WDV, from the 27 you can calculate. Okay, 27. Rent advance. Rent advance. Okay. So now the interesting concept. Rent advance is one of the interesting concept here. Rent advance is nothing but rent paid in advance. It's not about deposit. If you want to go for rental, usually you have to pay a deposit, right? Advance, like that. That is what about the rent advance here. It is not a regular outstanding rent or rent paid in advance. Rent advance. This was a confusing statement. Very first time when you see that term in the question, now you get confused. You just confused with the rent paid in advance with the rent advance. But rent advance is nothing but deposit. Okay, rent advance. The value being 12,000. Rent deposit, as well as we have the electricity deposit, EB deposit, 1,000. Three-wheeler tempo van, 40. After deposition, it is 30. So we have posted all the asset items. Wherever we can represent, we can post it. Wherever can be posted, we have posted. Now let's move on to the liability side items to be posted here. Here, K Azad's capital 1,50,000. Capital 1,50,000. Creditors for oil purchases. Opening balance 2 lakhs. 12% security deposit from customers. 50,000 rupees. Security deposit from customers. The value being 50,000. Creditors for expenses. Rent, salaries, commission. So all these things are what? Previous year outstanding. As all these things are the previous year outstanding, it should be subtracted from the current year rental expenses, salaries expenses and commission expenses. Is that clear? So, rent, this 6,000 is the previous year outstanding, should be subtracted. And salaries, 4,000 minus should be a minus item. Commission, minus 20,000. Is that okay? These are the minus item. Current year outstanding should be added. These things are the previous year outstanding, should be subtracted. Clear? Hope now you will be able to understand this one. So we have completed all these items. Okay, balance sheet items completed. Now we'll start posting the items given in the receipts and payment account. But these details are not given in account format, so you have to post twice. You have to post twice. Yes. Let's start with the cash sales. In credit side of trading account, cash sales, the value being 5,26,500. Collection from debtors. Collection from debtors. So debtors made a payment. So cash or bank, in bank account, 26,73,500. So receipts are over. Now I have to post the payments. So I have to finish a paying payment. Payments to landlord. Payments to landlord. What's that? Maybe rental payment or rent advance payment. Deposits also may be possible. There may be outstanding advance. Lots of adjustments are there for the payments to landlord. So it is better to work out this as a separate working note. I'll get this to be discussed later on separately. Salary is 48,000. Current year expenses. Miscellaneous expenses. The value being 12,000. Commission 20,000 rupees. 20,000 rupees outstanding in the previous year. Current year commission being 20,000. Minus 20 plus 20, it becomes 0. Personal income tax 50,000. Part of drawings for taxation, personal income tax. The value being 50,000. Is that okay? Drawings. Transfer on 11023 to FD. So they have purchased an FD. Applicable rate of interest for this being 12%, 6 lakhs. Investing in FD, fixed deposit, is nothing but asset creation. Post that value here, 6 lakhs. And the investment is made on 11023. What is the year end? 31st March. So for 6 lakhs at the rate of 12%, since the date of purchase to the year end, 6 months is there, no, you have to calculate interest for the 6 months. Then what is the value? Is it 36,000? 36,000 should be interest receipts. But in receipt side, we don't have any receipts. It means it will be outstanding. Accrued interest. Hidden adjustment. We have studied the hidden adjustments in final accounts itself. So this is a part of hidden adjustment. 36,000. Is that okay? So in your P&L account, interest accrued on your investment being 36,000, and as this income is supposed to be receivable, will be posted in the asset side, interest accrued, the value being 36,000. Okay. And to creditors for oil suppliers, payment made to the creditors here, bank or cash. The payment made to the creditors reduces the creditors balance, this value being 24 lakhs. Another entry, it should be in the payment side. So I missed to post everything in the payment side. I will now make the payment side posting here. Receipts and payments. So payment side. For the landlord, payment to landlord, value being 79,000. Salaries double entry, 48,000. Miscellaneous, 12,000 payment. So payment as well as expenses. Commission, 20, as well as posted in the payment side as well as in the expenses side. Then income tax, personal tax are named as drawings. Simply you can name drawings itself. The value being 50,000. Transfer to FD, which is 6 lakhs. And payment to creditors, 24 lakhs, double entry here as well as there. Similarly, you have to finish up posting what? You have to finish up posting receipts also. Payment to landlord, I keep it pending separately to be discussed. Payment to landlord. Payment to landlord, the value being 79,000. I have to deal it separately. One of the interesting adjustments. Now, receipt side, cash sales and collection from debtors should be posted twice. Once we posted, so second posting also be done now. Cash sales 5,26,500 posted here. Again, it should be posted in the receipt side. Sales, cash sales, the value being 5,26,500. And collection from debtors, we have posted that here. One more posting being the receipt side of the cash book. Collection from debtors, 26 lakhs, 75,000, 73,500. Clear? Is that okay? So these kinds of illustrations in your examination not required to get tallied comfortably. Okay, if you are getting tallied completely for the right answer, if the question carries 20 marks for the right answer, you will get around 1 or 2 marks only. For the posting, you will get the mark. The posting what we have done now, if it is being 20 marks illustration, you can definitely score anywhere between 6 to 8 marks. So your intention in case of toughest illustration, try to score at least 40% mark. In case of some easiest question, you can try to score beyond that around 60%, so you'll through the exams. That's the logic. So if you don't get the answer tallied, don't work with that same in your examination. You finish up that and go to the next illustration. To the extent you completed, no, it will carry around some good mark also. So now I just posted the items given in the receipts and payment as well as opening balance sheet, not adjusted anything. As per the adjustments, if I am able to post one or two adjustments, of course you can score better mark also, right? Let's now start with adjustments to be incorporated. Yeah. A scrutiny of the other records gives you the following information. During the year, oil purchased at 250 tins per month basis at a unit cost of 1000. So purchases being, how many tins are purchased? 250 per month for 12 months, 3000 tins purchased. At what rate? 1000 rupees per tin. So 3000 thousands. So overall purchases being 30 lakhs. 5 tins were damaged in transit, in respect of which insurance claim has been preferred. So out of that, 5 tins were damaged, abnormal loss, and it is insured. So we will be getting the revenue also. The surveyors have since approved the claim at 80%. The damaged ones were sold for rupees 1500, which is included in the cash sheets. Right. So we got around 80% value as a claim, and damaged piece also retained by us only. So we discarded that damaged pieces for 1500 rupees. Is that okay? Now, 1 tin has been used for personal consumption. The total number of tins sold during the year was 3000 at a unit price of rupees 1750. Is that clear? So I'm going to incorporate these information for finding the sales, purchases and all here. I'll keep it pending here. Okay. Now tell me, what is the opening stock we have? Opening stock we have 125 tins. Okay. And we purchased how 52 lakhs 50,000. 52 lakhs 50,000. This is what about the overall sales. What about the closing stock value? The newly purchased item costing 1000 means for 119 tins remains with us in closing stock, valued rupees 1,19,000. 1,19,000 rupees. What is the purchase value? Multiply with the 1000, so 13 lakhs will be the purchase value. What about the abnormal loss? 5 tins were lost abnormally, 5000. 5000 is the abnormal loss. Am I right? This abnormal loss, insured. So you are getting claim. How much claim you are receiving? 80% value is recovered as claim. 80% value is recovered as claim, 4000 rupees. And the damaged piece is left with us. We discarded for a meager amount. We collected 1500, not original sale value. We get a small amount, 1500. Sale value, scrap value, 1500. So even in abnormal loss, we have small 500 rupees revenue. Abnormal loss. Is that okay? How to consider the abnormal loss? How to treat in your final accounts abnormal loss case? In case of abnormal loss, the value should be posted in the credit side of the trading account and debit that in the P&L account. That's the logic. Okay. Similarly, I am going to show the abnormal loss here. I think I have posted everything. Drawing being 1000. This value being 1000. Drawing. So I am going to incorporate all these details in the final accounts. I am going to deal only the abnormal loss concept. In case of abnormal loss, post the value here. What is the cost of the abnormal loss? 5000. What is the value you recovered? The amount recovered by selling the abnormal loss item will be credited here, not received. If it is received, then it may be appearing in the receipts and payment. As it is not appearing in the receipts and payment account, okay, we assume that the just admitted, we can receive it later on, otherwise it's an outstanding insurance claim. So any revenue from here, okay, outstanding claim. being 4,000. Not only that, scrap value sold. For that, I received how much? 1,500. Okay, all these things are for abnormal loss weighted. In case of abnormal loss, the loss value should be posted in the credit side of the trading account and debit side of the P&L account. If it is insured, any insurance revenue recovered will be posted in the credit side. Now this 4,000 will be recoverable later on. So I'll post that in the asset side, outstanding claim. Amount recoverable being your asset, 4,000 rupees. 4,000 rupees. Is that clear? And this 1,500, sir, this 1,500 is already included in this 5,26,500. Should not include this. So 5,26,500 is now reduced by this extent. 5,26,500 minus 1,500. The 1,500 related to the revenue of selling the scrap value of scraps of the abnormal loss. That will not be part of your sales. It will be recoverable value from the abnormal loss. So here the sales value being 5,25,000. 5,25,000. Is that clear? So the cash is being 5,26,500 includes the revenue collected from the selling of the scraps. So that should be separately dealt. The pure good items sold outside will be shown separately. Sale value of every tin costing rupees how much? 1,750. Okay, come on. Divide the 5,25,000 divided by 1,750 to find out the number of tins sold in cash. Make it faster. Make it faster. How many tins, pa? Huh? 300. Okay, 300 being cashes. What about the credit transaction? How many tins were sold in credit? Now, overall sales being 52 lakhs 50,000. 52 lakhs 50,000. Out of which cash being 5,25,000. Balance how much? Balance being 47 lakhs 38,000. 25,000. 47 lakhs 25,000. The overall sales revenue being 52 lakhs 50,000 from the working note. I segregate that into cash and credit. Abnormal loss being 5,000. Abnormal loss being 5,000. 300 being cash sales, and what about the credit sales? Come on. 2,000. 2,700. Overall tins sold being 300 plus 1,000, 2,700 being 3,000. We got this value. We got this value. Is that clear? Now credit sales will be posted again where? In debtors account credit sales. Sales. That too in credit. The value being 47 lakhs 25,000. 47 lakhs 25,000 is the credit sales. So I have broken the entire thing into small aspects. Opening stock plus purchases. And before arriving the closing stock, what happens the purchased tins we have along with the opening stock? Out of 3,125, 5 tins were damaged. That may be treated as abnormal loss. 1 tin was taken by the owner drawings. So that drawing should also be posted here. Drawings. Drawings should be subtracted from the purchases or posted in the credit side. So I post that in the credit side, 1,000 rupees. That will be subtracted from owner's capital. 10,000 drawings for personal tax, I think. Another 1,000 rupees is for drawings of the stock. And 3,119 leftover stocks. Out of that 3,000 sold. Overall collection 52 lakhs 50,000 rupees. Out of that 5 lakhs 25,000 being cash collections, balance being credit sales. Right. Here the sales information related to the cash includes scrap value sale also. That should be excluded because it's an abnormal item separately dealt. Separately dealt. Is that clear? Now closing stock being 119 stocks are there at the rate of ₹1,000, 1,19,000 rupees. Again, you post that in balance sheet. Stock in trade. The value being 119,000. 119,000. Clear? So you cross check this. Opening stock 125 tins we have posted already, given. Purchases 3000 tins were purchased. Now we have to post this one. So purchases, the value being 30 lakhs. How many tins? 3000 tins. What is the abnormal loss? 5 tins. What is the drawings? 1 tin. What is the closing stock? 119 tins. Count the total tins available in the debit side and credit side. In the debit side, we have 3125 tins. In credit side also, we get, I think, 3125 tins. We now accounted for all the 3125 tins. The purchases value should be posted in the credit side. So here, credit purchases, the value being 30 lakhs. Cross verify now. Opening stock posted, purchases posted, abnormal loss posted in the credit side of the trading and debit side in the P&L account. Amount recoverable for the abnormal loss credited, drawings also posted, and sales posted, closing stock posted. So we have completed posting all these items related to stock adjustment. Clear? We have completed only one adjustments currently. Only one adjustment. Still we have how many adjustments? 3 more adjustments. So rest of the adjustments now we'll decide. So adjustment number 1 is over. Let's go for adjustment number 3. This is easy. Provide depreciation at the rate of 10% and 25% on WDV value on furniture and van. For furniture it is 10%, right? Come on. For furniture 10%, 27 minus 2700. What is the ultimate value? 24,300. Now in P&L account, depreciation for furniture, the value being 2,700. In case of van, 25% will be calculated, that too on WDV value. So that 30 is WDV value only. On this 25% being 7,500. Am I right? So the depreciation for van being 7,500. If I subtract 7,500 from 30, 22,500 will be the ultimate value. Okay, 22,500. Okay, 22,500. So we have completed the adjustment number 3. 4th, it is further noticed that a customer had paid 10,000 on 31/3/24 as security by cash. One of the staff has defalcated. The claim against the insurance company is pending. So there is a defalcation, absconding with the 10,000 rupees. Anyhow, we have to answer the customer, right? So he demands that I have paid already 10,000 rupees. It's none of my business. You have to pay me in due course. So now we are supposed to pay to him. Anyhow, it's a loss, defalcation. If there is any chance we can recover, otherwise it will be an expense debited to the P&L account. So here you see, security deposit 50. On investigation, we found that one more person has paid another 10,000 rupees as security deposit. Now the security deposit is 10,000, 60,000 rupees. If it is being the receipts, it should be posted in the receipt side. No, but the received amount is now is in the hands of the cashier, is absconded. Then no other way it's treated as loss, can be debited to the P&L account as defalcation expenses. Defalcation losses. The value being 10,000 rupees. Huh? Oh, screen, okay. Clear? So this value being 10,000. Is that clear? Hope now you will be able to understand this defalcation case. The last adjustment, rent until 39/23 was 6,000, was increased thereafter by 1,000 per annum per month. Additional advance rent 2,000 was paid, and this is included in the figure of payment to landlord. The second point is going to be studied in detail. So for the previous year, 1/4/23, ends on 31st March 24, the rent being 6,000 per month for some time, from thereafter 39/23 onwards, the rent increased by 7,000 rupees. When the rent 6,000 being outstanding, means rent being 6,000, the rent advance being 12,000 rupees. 12,000 rupees. Is that okay? Means 2 months rent could be collected in advance. Per month rent being 6,000. Okay, sorry. Per month rent being 6,000. Rent advance collected being 6,000 into 2 months, 12,000 rupees. The moment rent advance is, the rent is increased from 6,000 to 7,000 rupees, now the rent advance should be how much? 2 months rent of that part, 7,000 into 2, 14,000. Another 2,000 also be collected for the rent advance. Now from this period to this period, 6 months is there, 6 months rent being 36,000. From this period to this period, another 6 months is there, 6 months rent being 42,000. Overall rental expenses being 78,000. Overall rental expenses being 78,000 rupees. Right. Amount collected from the landlord, how much is that? 79,000. Amount collected from the landlord being 79,000. Okay, sorry. This 79,000 includes this 2,000, and balance being 77,000 is nothing but what? Rent collected. 77,000 being rent collected. Clear? Rent collected. Now, see here. In this illustration, 6,000 being the outstanding rent in the previous year. Previous year rent being outstanding. Let's see. Rent paid, add outstanding of the current year, less outstanding of the previous year, then ultimate value being rent expenses. Rent expenses being, as per the information, 78,000 should be there. This 78,000 should be in the payment side, rent. Okay, rent will be 78,000. Right, sorry. The overall rent payment being 79,000. Out of that, 2,000 is for rent advance. Because of this, the rent advance becomes 14,000. 14,000. Actually, when the rent being 6,000, 2 months rent in advance 12,000. Suddenly the rent increased from 6 to 7. One extra rent also be there, right? So by the time 7,000 into 2 months, 14,000 should be the rent advance. Of course, the additional 2,000 is collected on revision. So hereafter the rent advance being 14,000. Is that clear? So the amount collected 79,000 includes for the payment of deposit for rent. Actual payment for the rent is only 77,000, which is here. Clear? 77,000. This is what about the rent paid. So the rent paid, the amount payable to the landlord 79,000 includes 2,000 for the advance, another 77,000 for the rent. Rental expenses 78,000 rupees. Outstanding of the previous year is given here. Outstanding of the previous year being 6,000 rupees. 6,000 rupees. Is that okay? Previous year outstanding. I'll post that value here. Previous year outstanding 6,000. Now you can finish up tallying this value being 78 plus 6, 80, 4,000. And the difference between these two balancing figure is the current year outstanding. How much is that? 7,000. So what does it mean? Usually the last month rent remains outstanding as on 31st March. As on 31st March, last rent is remaining pending. For the year 22-23, prior to that year, 6,000 per month for the full year, 6,000 into 12, 78,000 rupees, right? 78 or 72,000 rupees. In that 72, 6,000 pending. In this current year, 7,000 will be the rate. The last month rate remains outstanding, which is 7,000 rupees. We found out as a missing data. So outstanding of the current year being 7,000, I post that value here. Outstanding rent, the value being 7,000 rupees. Okay, so I posted everything. Overall collection 79,000 is broken this way: 2,000 for the rental advance, 77,000 for the rent payment. For the rent 77,000, outstanding of the previous year, this one rental expenses being 78,000 rupees. Based on this information, we found out the outstanding for the current year, which is 7,000. Current year outstanding will go to the liability side, so I have posted that. Hope this is one of the complicated adjustments in the very first time if you see the question in your exams. Rest may also be guessed, but this may be interesting, so I have incorporated that one also. Similarly, unimaginable adjustments may be expected in case of single entry, even non-profit organization. So you widen your thought process by solving numerous illustration. Now, that's all. Hereafter, you can solve the other things easily. Come on. Tallying the debtors, you'll get closing balance. How much is that? 48 lakhs, 25,000, 85,000, 48 lakhs, 85,000. Closing balance in this case being 22 lakhs, 11,500. Will come here, debtors, 22 lakhs, 11,500. Creditors, tally the creditors, 32 lakhs, 32 lakhs. Your closing balance should be 8 lakhs. Post that here, creditors being 8 lakhs. Now, finish up tallying the trading account. Trading account total being 53 lakhs, 75,000, 53 lakhs, 75,000. And you will get the GP. GP here being 22 lakhs, 50,000. Transfer the GP here 22 lakhs, 50,000. Tally this and to find out the net profit. Come on. I think the total being 22 lakhs 91,500, 22 lakhs 91,500, and salary minus 4 plus 48, 44,000. Commission minus 20 plus 20, 0. Now what is the ultimate value? That security deposit, it carries some interest. That is also given as a hidden adjustment. Security deposit carries 12% interest. So you can calculate 12% on 50,000. Maybe 6,000 may be assumed to be the payment. So interest on security deposit, 6,000. We calculate the interest on security deposit on the opening value. Outstanding interest on security deposit being 6,000. Now come on, finish up tallying this. I think you'll get the net profit being 21 lakhs 26,300. Add that with owner's fund, 21 lakhs 26,300. The ultimate capital balance here being, okay, drawings is how much? 51. Okay, this is 50. Okay. Now the ultimate value being 22 lakhs 25,300. Finish off tallying the balance sheet. Hope this is agreeing with 30 lakhs 98,300. 30 lakhs 98,300. Receipts and payment. Close the receipts and payment and find out the balance here. So the total of receipt side includes the security deposit collection 10,000 rupees. Security deposit collection being 10,000 rupees. Is that okay? 32 lakhs 85,000. and you can find out the balance. This 10,000 you can simply skip, no problem. If you skip, then it is 75,000. Balance value being, if you show 10,000, it is understood that this money is taken by the cashier, defalcated, okay, so stolen, okay, or you can simply cancel these two, no problem. So then the ultimate, so இன்டரோட லெவல் எப்படி இருக்குன்னு தெரியுதா? இன்டர் தானே சார், ஃபவுண்டேஷன் எதுக்கு சார் கொள்றீங்க? நீங்க எல்லாம் இன்டர் வருவீங்கன்னு நம்பிக்கையில கொள்றேன். இன்ட்ரெஸ்டிங் கொஸ்டின் இல்லையா? சி, இந்த மாதிரி ஒரு சேலஞ்சிங் கொஸ்டின் எடுத்து ஒர்க் அவுட் பண்ணுங்க. இந்த மாதிரி ஒரு கிரியேட்டிவான கொஸ்டினை ஒர்க் அவுட் பண்றதை விட்டுட்டு ஸ்கூல்ஸ்ல டெபிட் சைட் கரெக்டா போட்டியா, கோடு கரெக்ட் நீட்டா எழுது, இதெல்லாம் நீட்டா எழுத முடியுமா? இப்போ நீட்டாலாம் எழுத முடியாது. ஐ ஸ்டார்டட் பை 4:31 as per internet time. Now it is 5:14. Almost 43 minutes I have taken. அத்தனைக்கு சில கால்குலேஷன் கால்குலேட்டர் யூஸ் பண்ணல, புக்கை பார்த்து போட்டேன். டோட்டலிங் மட்டும். நீங்க மட்டும் புக்கை பார்த்து போறீங்க. நான் பாஸ் பண்ணிட்டப்பா, என்ன இனிமேல் கேள்வி கேட்க மாட்டேன். ரைட், இப்போ எக்ஸாம்ல இந்த சம் போட முடியுமா? சத்தியம் முடியாது. யூ நேரத்தில் 40 மார்க் வாங்கிடு. 3 கொஸ்டின் இருந்தா 40 மார்க். ரொம்ப அசால்ட்டா சொன்னார். ஆமா, நல்லா தானே இருக்கு. 3 கொஸ்டின், ஒவ்வொரு கொஸ்டினுக்கு 15 மார்க், 45 மார்க். கொஞ்சம் ஸ்கிப் ஆனாலும் 40 மார்க். 3 கொஸ்டின் அட்டன் பண்ணு, ஒவ்வொன்றுக்கு 1/2 மணி நேரம். அப்படின்னு நான் உட்காந்துட்டேன் தைரியமா. 1.5 மணி நேரத்தில் 40 மார்க் வாங்க முடியாது அப்படின்ட்டு. மொதல் கொஸ்டின் இது போடுறேன் 3/4 மணி நேரம் ஆயிடுச்சு. டேலி பண்ண 300 ரூபா இடிக்குது. இதே நான் எம்ப்ளாயியா இருந்து 300 ரூபாய் இடிச்சா நான் என்ன பண்ணுவேன்? எனக்கு 25,000 ரூபாய் சம்பளம் தராரு. பாஸ்கிட்ட சார் 300 ரூபாய் இடிக்குதுன்னு உடனே சொல்லுவார். சம்பளத்தை ஒரு 1000 ரூபாய் குறைக்கட்டுமாம்பா. எதுக்கு வம்பு? நானே என் கை காசு விட்டு கட்டுறேன். 300 ரூபாய் கட்டிட்டு சார் டேலி வச்சுன்னு சொல்லிட்டு ஏமாத்திட்டு போயிடலாம். இதுல பண்ண முடியுமாக்கும்? அந்த பேப்பர்லேயே 300 ரூபாய் வச்சுட்டு சார் அந்த டிஃபரன்ஸ் நான் கையில வச்சுட்டேன், பார்த்து போடுங்க அப்படின்னு சொல்ல முடியுமாக்கும்? 3/4 மணி நேரத்தில் அவுட்டு கொஸ்டின் பேப்பர்ல. ஆனாலும் அந்த பேப்பர்ல ஐ செக்யூர்ட் 68 மார்க்ஸ் எக்ஸாம்ஷன். ஐ வாஸ் தி ஹையஸ்ட் ஸ்கோரர் இந்த பேப்பர். ஏன்னா மூட்டை முடிச்சு எல்லாம் கட்டுற இன்னொரு சம் இருக்கு, வெளியே போக முடியாது. ஒரு கொஸ்டினுக்காக இன்னொரு கிளாஸ் வைக்க முடியாது. 4th கொஸ்டின் இந்த அளவு காம்ப்ளிகேஷன் கிடையாது, ஃபாஸ்டா முடிஞ்சிடும். இட் மே பி அரௌண்ட் 15 to 20 minutes வில் ஃபினிஷ் அப். வெளியே போய் நீங்க சும்மா நிக்கணும், நிக்க மாட்டீங்க நீங்க. அதனால but this question is the challenging one, interesting one. I really enjoyed this question while solving very first time. I struck to understand this concept. இந்த பார்ட் எனக்கு புரியல, சொல்யூஷன் பார்த்து தான் நான் அண்டர்ஸ்டாண்டே பண்ண முடிஞ்சது. அப்போ எக்ஸாம் நான் என்ன பண்ணுவேன்? அதான் சொல்றேனே, உங்களை 100 வாங்கணும்னு சொல்லவே இல்லையே. சில அட்ஜஸ்ட்மெண்ட்ஸ் தெரியலனாலும் பரவாயில்லை, அதுல போய் நோண்டிட்டு உட்கார்ந்துருக்காதீங்க. Is that okay? We'll go for the last illustration, question number 5. I can solve bit faster. The last illustration, with that single entry is over. 4th sum is the challenging sum among the other sums we have solved. The 5th is pretty easy. ஸோ இன்னைக்கு மழை பெய்யறது ஒரு பெரிய அட்வான்டேஜ். அதனால 7-8 மணி வரைக்கும் ஒரே கிளாஸ் எடுக்கலாம். நீ ஏதோ சொன்னீங்க நான் ப்ராஃபிட் ஆர்கனைசேஷன் புக் பேக் ப்ராப்ளம் முடிக்கலன்ட்டு. ஆசையை நம்ம தீர்த்துக்கலாம். ரைட், now let's start with question number 5. A trader keeps his book of accounts under single entry system on 31st March 2023, and his statement of affairs the beginning is given, and we have been given cash book also. So we have been given opening statement as well as cash book. So our load is now decreased. So what do you have to do? You have to prepare trading and P&L account and balance sheet. Trader maintains a steady gross profit ratio of 10% on sales. One information. Yes, open the trading and P&L account as well as the closing balance sheet. With the bills payable. With bills payable. Start post all the items here. First, let's start with the assets. And then liabilities. We have to finish up posting the assets and liabilities. We'll start with furniture, fixtures and fittings. 100,000. Assume we may have the depreciation. Opening stock 6 lakhs 10,000. Trade debtors opening balance 1,48,000. BR opening balance 60. Unexpaid insurance. Okay, insurance expenses paid in advance. Right. So insurance expenses minus. Okay. So this is nothing but insurance expenses paid in advance, like previous year advance should be added. This is for the current year. Advance of the previous year. What's the value? The value being 2,80,000 rupees. Bills payable opening balance 1,25,000. Outstanding expenses, we have to add with the insurance itself. Okay, add outstanding of the previous year, the value being 45,000. Capital account, the value being 2.5 lakhs. With that, we have posted all the items given in the balance sheet. Opening balance sheet items posted here. We have no classification as expenses, insurance expenses and all. I've seen the illustration. We have expenses only, which includes insurance related or other things also. So commonly it is expenses. Advance of the previous year is added. So outstanding of the previous year should be subtracted. Sorry, this is minus item. So with that, balance sheet items over. Let's go for the receipts and payment. Finish up posting the receipts first of all. Okay. Yes. Cash sales in trading account sales related to cash being 73 lakhs 80,000. 73 lakhs 80,000. Receipts from trade debtors. So in debtors, bank or cash, how much is received? 15 lakhs 10,000. Receipts for bills receivable. We have received from the BR also, bank on. So we have posted all the receipts wherever it can be posted. Now let's go for the payment side. So we have these items in the payment side. Payment to trade credit 20.7. There is outstanding as well as advances related to this. Drawing is there, so it should be subtracted from the capital. This value being 2,40,000. Cash and bank is nothing but your closing asset should be posted in the balance sheet asset side. 1,27,300. 1,27,300. With that, this one is over. Clear? So receipts and payments over. Start with the adjustment here. Here is an adjustment. Discount allowed to trade debtors and all these informations are here. I need to finish up this adjustment. Yeah. Discount allowed to trade debtors and receivables from trade creditors amounted to rupees 3,600 and 28,000. Discount allowed will be reducing the debtors value, so I post that value here 36,000. Discount received reduces the creditors balance, which is 28,000. Double entry. Discount allowed being your expenses debit in the P&L account, the value being 36,000. Discount received being your income, post that in the credit side of the P&L account. Discount received, this value being 28,000. 28. BR is given to the creditors. BR is given to the creditors. We have the BR. On maturity, we can encash the BR or you can endorse to some creditors. So, creditors, it is given to whom? To the creditors. Endorsement, 15,000. And this reduces the creditors balance by transferring the BR of ours to the creditors, 15,000 rupees. 15,000 rupees. Then annual fire insurance premium being 6,000 was paid every year on 1st August for the renewal of the policy. Okay, annual insurance premium 6,000 payable on 1st August. 1st August. Actually, year ends on March. So we start with 1/4/20. What's the year beginning? Okay, 23/24. So 23 year ends on 31st March 24. So we have paid 6,000 rupees meant for 1 year starting from 1st August. It ends on 31st July of the next year. Is that okay? I paid 6,000 rupees on 1/8/23 stating that this 6,000 is for one complete year. One complete year means it starts from 1st August and ends on 31st July. This 6,000, no, for this period, how much it could be, for this period, how much it could be. Hope this will be 4, 5, 6, 7, 4 months, right? This is 8 months. So 4,000 related to the current period, another 2,000 related to the next period. Otherwise, this is nothing but payment made in advance. Current year advance. Current year advance. Current year advance should be subtracted. So advance for the current year. So earlier we have 2,000 rupees advance. Now we have 2,000 rupees advance. Last year's advance is added to this year's advance is subtracted. This year's advance being your asset posted in the balance sheet asset side. So premium in advance. Premium in advance. This value being 2,000 rupees or unexpaid premium. Furniture, fixtures, fittings were subject to depreciation 15% per annum on diminishing value method. So 15%. You can calculate 15% on 100. 15,000 and 85,000 will be the depreciated value. Depreciation will be your expenses can be debited here. Furniture, fixtures, fittings, triple F. The value being 15,000 debited in the P&L account. Okay, so we have completed this adjustment fully. This adjustment fully. Okay, so with that, this page is completely over. Last, we have this one. You are also informed about the following balances as on 31st March 24, year-end balance. Okay, year-end balance. See, I'm going to post that year-end balance here. What is the closing stock we have in the year-end? 6,50,000. That should be posted in the trading account credit side. As well as that should be posted where? In balance sheet stock, closing stock 6,50,000. We have been given some assets value as in the year end. Rather than we calculate, it is already given, you can just post that. And trade debtors, the value being 1,52,000. Another value, it should be posted in the debtors closing side, closing debtors. This value being closing balance, 1,52,000. 1,52,000. BR also we have closing balance. The BR here being 75,000. Another record should be in BR closing balance, 75,000. Bills payable 1,40,000. Another place it should be posted in the bills payable closing value, 1,40,000. And outstanding expenses, liability outstanding expenses 5,000 rupees. Current year outstanding should be addable. Current year outstanding should be addable. This value being 5,000 rupees. I have posted everything. I have posted everything. Is that okay? Now what happens? Trader maintains a steady gross profit ratio of 10% on sales. So the GP being whatever sales may be, cash sales as well as credit sales both, on that it should be 10%. On that it should be 10%. Okay. Now finish off tallying the ledgers now. There will not be any more complications. First to finish up the working notes related to the debtors, BR, creditors and BP and all. Thereafter finish up trading and P&L account. Finally you can solve the balance sheet. Here debtors. First to finish up the BR here. By tallying the BR, debtors and BR means you have to close the BR first of all and then arrive the debtors balance. What is the value here? 4,30,000. 4,30,000. And here the value being 3,70,000. What about this balancing figure? New acceptances. We send the BR to the debtors and got the acceptances. So debtors. Here BR 3,70,000 rupees. 3,70,000 rupees. The balance what I get is transferred here. Now close the debtors to find out credit sales. So the total being 20 lakhs 68,000. 20 lakhs 68,000. The balancing figure here being credit sales 19 lakhs 20,000. So I transfer that here 19 lakhs 20,000. Now bills payable no 9 lakhs 55,000. 9 lakhs 55,000. 8 lakhs 30,000 is the closing balance. This balancing figure is what? New acceptances for the creditors. So should be posted to the creditors account here. Bills payable accepted. 8 lakhs 30,000. 8 lakhs 30,000. If you tally this, what will you get? Balancing figure could be credit purchases. The balance of the creditors is nothing but credit purchases. What is the value here? 80? 83 or 89?
83
This side. You get the balance in the other side. Okay. Now we don't have the closing balance here. We don't have the closing balance here. As well as we don't have the purchases. So as we have not been provided with the two information, no other way to solve this now. Only one means we can calculate as a missing data. Then what we can do, as you are aware about that, out of the total sales, GP is 10%. Add up these two and find out the GP here. I think the GP being 9 lakhs 30,000. 73 lakhs 80 plus 19 lakhs 20,000. You'll get 93 lakhs on the 10% being 9 lakhs 30,000. Finish up telling this 99 lakhs 50,000. 99 lakhs 50,000. The balancing figure will be the credit purchases. 84 lakhs 10,000. Okay. Now I can substitute that value here 84 lakhs 10,000 to find out the closing creditors balance. What is the closing creditors balance? The total being 89 lakhs 90,000. 89 lakhs 90,000. Closing balance being 6 lakhs 10,000. That closing balance will be posted at the balance sheet credit side, liability side, 6 lakhs 10,000. And GP 9 lakhs 30. Now, in P&L account, find out the expenses. 620.7 plus 2 minus 4.45 plus minus 2 and plus 5. Doing all the adjustments gives us 5 lakhs 80,700. Finish up telling this 9 lakhs 58,000. 9 lakhs 58,000. Your net profit in this case being 3 lakhs 26,300. Should be addable with the capital net profit 3 lakhs 26,300. Then the ultimate value of capital after these three 90. What's the value? 3 lakhs. Okay, 3 lakhs 36,300. Total of the balance sheet 10 lakhs 91,300. 10 lakhs 91,300. Fourth illustration is one of the challenging illustrations. The fifth is nothing but we have incorporated the BR and BP also along with debtors and creditors. That one extra learning you need to do here. Otherwise, the sum is pretty simple only, right? So start practicing additional illustrations on this topic also.